But again, an RMD stands for required minimum distribution. If you've attained a certain age and you've got money that is pre-tax saved in a 401k or a traditional IRA that you haven't paid tax on yet, you're forced to take out a certain percentage each and every year.
Yep.
So again, got to be calendar year. Make sure that you've taken those so that you don't have a tax imposed upon you or a penalty.
Achieving financial success takes dedication, discipline, and most importantly, a plan. For over 30 years, Don Reynolds has helped savers define their needs, formulate their plans, and achieve their goals. From accumulation to preservation and protection, and through the income distribution phase in retirement, implementing the right strategies makes all the difference. Your retirement is our business. Welcome to Strategic Asset Preservation.
Well, hello again, everybody. Welcome to another episode of Reynolds Wrap. Of course, I'm Don, and this
Corey's
is Corey.
over here. Yep.
As usual, we're here. So today we want to talk about, and we're recording this today, but what we're talking about is the end of the year is coming. It's coming fast. And with that in mind, we want to make sure that you're taking advantage of the opportunities. Again, we've talked about historic lows taxes. If you're looking at doing conversions, you got to get going on that. We always do them in November. Because we want people to, live their life. And then we look at how much they've spent, if they've taken additional money out of IRAs, so on and so forth.
Yeah.
So we can really do that tax planning to make sure that we maximize the bracket that they're in. And potentially, if it makes sense, looking at long-term, maybe even jumping into the higher bracket because, future taxes may be a lot higher and it would cost you more. So again, the clock is ticking, folks. Be expedient about this. Do your diligence. And if you need help with it, if you need the tax planning, that's what we do here. It's really how we built the company. So we don't do taxes, but we understand them and we do the tax forward planning for our clients. Again, it comes with Social Security planning, all of that stuff. So, but this is really about end of year stuff.
Yeah, it's hard to believe how fast years go by. I mean, it's just crazy. Again, as we're talking here, it's nearing the end of 2024. 2025 is right around the corner. And hopefully you're listening to this before the end of the year so you can get some stuff done if you need to. But again, if you're not, making sure then to plan for 2025 or the end of that year, because as Don mentioned, tax planning is significant. Make sure that you get things done. And Roth conversions, I'll just elaborate real quick on that. A lot of people maybe start to plan and think about that last week in December. Often, most companies won't allow that. Yeah. You have to do your conversions early in December because there's such a rush that they don't have time to process it. So again, making sure that you're getting ahead of the end of the year clock ticking, if you will. Another one that's we see as a mistake or an opportunity is maybe a better way to put it is maybe you want to maximize your 401k or maximize putting into a traditional or Roth IRA if you've got some discretionary income. Now, again, typically a traditional or Roth IRA, we can fund up until the tax deadline of the next year, but 401ks and things like that, we can't. So if you got some discretionary income, you got a bonus that comes in at the end of the year because you or your company did very well. Maybe you want to up your contributions for the last paycheck or two, end of the year, get some money in, tuck it into that 401k or a 401k Roth before the year ticks away and we don't have that opportunity anymore. So again, just that's another one that comes to my mind that would be a good thing to make sure you take advantage of. And again, we do with our clients here as we look at it and help them with end of the year things. So
you want to make sure you maximize your 401k if you're not doing it. Now again,
and contribution levels are much higher there than on that traditional
they are.
Roth
they
IRA. So
generally go up almost every year. So a lot of people aren't even aware that they can actually be putting more into their 401k than they actually are because they weren't aware that the limits have gone up. So again, it's all education. It's change is constant, and they're always making changes to all this. And it's our job to make sure you're aware and up to date with all the changes. So, with that in mind, give us a call at 651-773-3859. Again, that's 651-773-3859. We're happy to sit down with you or talk to you over the phone, or if you want to come in. Again, you're never going to write out a check to sit at our table. We don't charge for that, and we don't charge for a discovery meeting to really take a look at your financial picture and see if there's things that we can maybe help you see that you don't see, improve on. Maybe it's reducing taxes. Maybe it's getting more Social Security benefits. Whatever the case may be, it's all about education and understanding.
Yeah,
So,
absolutely. And one last thing that I'll add here that came to mind too is RMDs. I know a lot of people,
Good
that
point.
we've met with over the years, have come to us and not our client yet, and they're either missed the last year's or they haven't taken their RMD yet for this year.
Yep.
And again, those have to be taken out in calendar year. We can't go beyond that. So
Mhm.
what an RMD again is, folks, if you don't understand, is a required minimum distribution. So if you have a certain age, current age because of Secure Acts are 73 if you were born before 1960. If you're after 1960 born, it's age 75. But again, an RMD stands for required minimum distribution. If you've attained a certain age and you've got money that is pre-tax saved in a 401k or a traditional IRA that you haven't paid tax on yet, you're forced to take out a certain percentage each and every year.
Yep.
So again, got to be calendar year. Make sure that you've taken those so that you don't have a tax imposed upon you or a penalty. So.
Yeah, and it's a big penalty. I believe it's 25% now. It used to be 50. They reduced it to 25. So, but still, who wants to pay a penalty period on our own money? It just doesn't make sense. So again, make sure you've got that base covered too as well.
Yeah.
So,
well, give us a call and we can help you with some of these year-end things, making sure that you've got those boxes checked and taken care of. And again, hopefully you get this in time before the end of the year because time just keeps going. It doesn't slow down.
That's for sure. Well, thanks again, folks. We appreciate your time and hope you're enjoying the show.
Yeah. Have a great day, folks.
Bye now.
Listen to more with Don Reynolds and Corey Still on the Strategic Asset Preservation Podcast by visiting 800preserve.com.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.